afternoon. So, seventh edition, Powerhouse, as the young lady says. Absolutely true. I think, first of all, thanks for the opportunity to speak here. I think the startup ecosystem in India has really evolved and thrived over the years. And I'm happy to say that today there are 2 lakh startups registered in India, which is a very large number. It is the third largest number of startups globally after US and China. 10 years ago, we had about 500, let's say, startups, about 2016, 2017. And over the years, it has really galloped. The entrepreneurship ecosystem in this country has been strong, which we all know. And in addition to the spirit of entrepreneurship, I think the investing ecosystem has also evolved over the years. It started way back. The private equity ecosystem started globally way back in 1980, 1990, when KKR did the Nabisco deal. Subsequently in India, I think it started more like 2005, 2006, when Blackstone and KKR started coming in, investing in various sectors, starting with technology. But over the years now, investors look at various lots of companies which have really come up and made a mark for themselves in very short period of time of, let's say, 3, 4, 5 years, which normally a large company takes longer because of their own rhythm, which is generally slower than what a startup can do. Because by nature, the rhythm of a startup is very agile, very fast and quick. Lots of trials, lots of errors also. But I think pivots also has helped smaller companies to reach where they have reached. So I think there have been a lot of success stories. Overall, in the last 5 years itself, there has been funding of, let's say, close to $100 billion into startups in India, which is massive by any standards. So India is galloping on that front. Yes, it's a powerhouse. Kerala has been a front runner in many ways. I think the topic today we're talking about is essentially how do you pitch to a VC. I think that's certainly an interesting topic. I think it's a little bit about how do you build your business as well as pitch to an investor. I think it's a combination of both. So essentially the important thing is when you're pitching to an investor, you're pitching your idea, you're pitching your business model, what is unique in your company, what is unique in you, which you're bringing to the table and to the business or the startup that you're creating. I think that is what an investor is looking at. I don't think they would be looking for another Me Too kind of organization or a product. So the differentiation that one can bring to the table, whether it is in terms of technology, it could be in terms of products, uniqueness, it could be convenience. So I think quite underrated, but I think convenience has also got a lot of premium in the minds of consumers. So it's a question of that uniqueness that you bring to the table, which you actually go and pitch to the investor. So as I said, if you think that your product is great and there is a great product market fit, you think that there are gaps, and there are gaps in every sector, to be honest. Even in cluttered markets, there are lots of opportunities that people have seen and shown. You bring that, you segment customers into various strata and then kind of address them in your own way. So I think pitching, what is an investor looking at from a pitch are few things. One, is there an idea which is doable? Is there a market for it, or can you create a market for it? I mean, it's not necessary that there's already an existing market for every business. You can actually create a new market through your own initiatives, and there are lots of examples around that. Then, how is it fitting in terms of product market fit? Is there a consumer who is really valuing your offering, whether it is your technology, whether it is your product or service, or just the delivery part of it. Um, if there is a consumer connect and product market fit, which is all related, I think that's something that an investor will look at as a second point. Third, I think it would be a lot about the resilience of the founder and the management team, because all said and done, the business is going to be carried out by the entrepreneur, and we have found that through data that a lot of cases the everything is working, but the management team is not executed well enough. So there is a market, there are consumer segments which you are addressing clearly. You have products which are really working well, but the execution hasn't really been done well. So that becomes equally important. To my mind, the strategy part or the vision part is very important, but execution part can actually make or break a startup. And that is where I think an investor is kind of concentrating a lot more, at least I do, in terms of judging the company that yes, this can be scaled and this can be sustained. And I'll talk about what is, these terms are used quite loosely. So I'll just like to talk about a little bit about the scalability and sustainability. So when we talk about sustainability of a business, it is about, it is a lot about unit economics. It is a lot about financials. It's a lot about how will you survive the first phase and the second phase and the third phase. So a lot of companies, as we hear from the market, and a lot of startups copy from other companies, right or wrong. There are weak unit economics or high burn models or high loss making companies in the startup stage. And many companies, many founders tell me that, look, this is the only way to go because others are also doing it. That's the only way to grow. But I think the lessons we have learned over a period of time as an ecosystem over the last, especially over the last 4-5 years, is high burn model works to some extent because it requires continuous funding. And that funding, as long as it comes, things are good. But if it stops for any reason, then what do you do? So I think it's very important to look at your model and your industry. If you're talking, let's say you're in fintech, what kind of lending patterns are you using, what kind of tech you are using, what kind of consumers you are targeting, and what kind of commercials you are gaining out of it. Because end of it, at a certain scale, you need to make profits. It's very important that businesses are built on fundamentals. To get swayed by few companies which have been successful through high loss model is a little high risk to my mind. And I don't suggest anyone to go down that route. I would say that when you're building something for the consumer, please build it in a manner that your business is sustainable. Can you run your business with less funding? Can you run the business for a longer period of time based on your customers' cash flow churning? I think that's the way to see, rather than hoping that, look, I'm going to spend money on technology, X million of dollars, on marketing, again, Y million dollars, and then and hope that my current investors or new investors will keep pumping in money. And as I mentioned, as long as that happens, no problem. But then somewhere the tap stops if the business model doesn't work, or if the environment changes, for example. Then you should not look at a collapsing of business. So I think the point I'm trying to make is that as an investor, when you look at a startup pitch, you also look at, can this be sustained? And personally, I believe that businesses have to be built on fundamentals. And fundamentals of business haven't changed over the last, years. It's just, if all the large organizations, one where I come from, and many, all the other large organizations have been built on very strong systems and processes, very strong cash flow focus, for example. And cash flow focus is little weak with founders for certain reasons. That has really impacted a lot of companies. So in the last 1 year, there have been about 30 to 40,000 new startups which have come up, which is great. And earlier before that, it was about 20, 25,000. But there have been about 5 to 7,000 or 8,000 per year which are closed also, right? So I'm very keen that the mortality rate of startups should be low as possible, because there's a lot of hard work which goes into you know uh, uh, giving your time and energy and trying to build your vision. It is not easy, and it's your money, it's someone else's money, and there's so many people involved in it, whether it's employees or families. Everyone's future is kind of intertwined. So being responsible on the financial front is very critical, and hence the mortality rate. If we can actually bring down the mortality rate, I'll be happier. So I think the fourth point probably I will look for is which I mentioned earlier, is scalability, which means that as you are kind of building your business, is it kind of are you able to scale with the same kind of products and services? Are you able to scale with certain expansions across the country or outside the country? Is it something that a larger set of consumers will accept? So I think that those are the some of the stuff that one would like to see, and certainly the unit economics is extremely critical. So these are some of the aspects that I think I would urge people to kind of be very mindful of when you're kind of building a startup. And mind it, as I said, the fundamentals of business don't change, whether you're building a fintech organization or a consumer tech, or even for that matter, let's say a healthcare platform. I think the point there is your skill. Everyone has a certain unique skill sets in my mind, and you have to build on that. While you would like to copy from others, not copy, but learn from others and kind of do similar kind of stuff. But finally, what you bring to the table is unique. And I'll give you a few examples in many startups that I see. I mean, probably see one startup a day, and we have a certain number of investments from the fund. There are companies which have really created certain products which are not, which are kind of similar to what is there available in the market, but tremendously successful because, let's say, in the food industry, there's a company who started a snack business. I think they have really nailed the taste pattern of the products, just superior to the leader in the market, and really executed well in terms of distribution, quick commerce, e-commerce, and stuff like that. And they really work hard. And what I mean is that the account management is very strong. The digital marketing is super. So and there's another company which is kind of strong in products, but not very strong in marketing. So what I tell them is that, look, you have a lot of ingredients, and now to be successful and go to the next level, you probably need to have a strong marketing team, which could be a small team, of course, not too large, small companies. So you have to figure out where are the gaps in your teams, in your organization, and in a way that you can afford, you build, fill those gaps. Those have really worked. I think identifying those and addressing them has really worked for many companies to kind of really been successful, grow, even if they are in a market which is cluttered. And that's what I mentioned earlier also. So in the skincare market, I think a lot of people keep asking me that there are lots of companies which are they're large companies, and there are a lot of incumbents in terms of startups which are evolved, and some of them have become bigger, some of them are still yet to become big. So how do you really sift out and say that, look, which one will work? Isn't it already cluttered, and how will a consumer kind of choose which product to kind of buy? But I'll give you examples. As there are so many companies which have hit 500 crores with a certain theme, which is actually a gap in the market. There is no other company which is actually has focused on that theme. And they have got, valuation is an outcome, by the way, but they have got good valuation. So, and they have grown well, they are profitable. So there are so many gaps. That is where the expertise comes in, that in this market, where are the gaps? How can I identify them? Even if you take help from people, understand, and then kind of start executing on them. I think that's something that I would urge people to look at, rather than just kind of doing something which is very me too. It becomes extremely, uh, the risk factor goes up, the competitiveness goes up significantly. So, the point is that when you're starting a business, you want to be successful, and how do you make it less risky, and how do you make sure that the chances of success go up? Very, very recently, I'm looking at two companies, small companies, which are into fragrance. Now, fragrance as a market is not really a sticky market. So, for example, deos are such as a products where people would, it's very price sensitive. So, if there's a product selling at 200 rupees, another brand comes in at 180, customers tend to switch. That's what we find. So, there's another company which has come up and said, like, look, this is clean fragrance, no alcohol, and various other parameters. And there is no other such product in India as of now. So that's the first mover advantage that they are going to get. And I think they are going to do well. Their understanding of the market is good. Their team is good, small team, and their execution abilities are very strong. So I think it's a combination of factors which actually would make a startup successful to my mind, and to make a mark for themselves. So whether it is a market where a lot of there are many multiple players, or you want to create something new, I think that's also a great idea. As long as you believe in it, as long as you feel that there are going to be consumers who are going to look at your services, at your products, which are unmet. So we look at met demands. We don't look at the unmet needs of consumers many a times. The efforts are higher, but then your chances of success are also higher. So I think fundamentally, it's also important to, as I mentioned earlier, is for you to also see that what is the strength you have, what are you bringing to the table. Many times, there's another company which you kind of want to emulate, a model company, model founder. You want to emulate them because they're successful. Of course, you should do that. But their strengths could be different than what your strengths would be. So it's very important to understand that what is that I can differentiate, or I can bring to a consumer or to an organization which is different than what others are kind of. So you could be strong in, let's say, product. So you probably need someone who is strong at marketing, I mentioned. Similarly, it could be that you are very good at commercial and marketing, but R&D you are not very strong at. So you try to understand how do I fill that gap. And there are various ways to do it. It's not necessary that, for example, today manufacturing can be outsourced. It's not really necessary to start a business, in a product business, for you to start manufacturing. Or for example, in fintech, do you want your tech team to be in-house or out-house? Those are some of the aspects that one can look at and understand. If you think you yourself strong in tech, you should build your team internally, absolutely. But if you're not, then probably you look at, can I get someone who can help me on this? So, but finally, you need to be an entrepreneur. You need to be a businessman in a non-traditional manner, but in a traditional manner also. I think thinking traditionally is not wrong, because that is where fundamentally a strong business is built. You should be ready to pivot if things change. If, God forbid, COVID kind situation comes, you need to change your business model. You should be ready to do that. That's what I look for in the founder, that if things don't work, what is the alternative? Is it that the business will crumble and close, which is like not the greatest of outcome for anyone, for anyone in the ecosystem. But are there ways to pivot? For example, Dream 11, look, they just zoomed and built a great organization. But gaming became a problem. There are regulatory issues, so now they're looking at other options of how to kind of change your play, get into something else, which something they understand and they can build. And that is where the openness of thinking is extremely crucial. And few other things are, you should be there in for the long haul. It should not be something that, let me build this business, sell it in 2 or 3 years. I think that's a very myopic way of looking at things, and there are more failures than successes in that thought process, organization. So if you are into it, you're not in it for the investor. You are in it for yourself, because you want to build a business. You have a vision. You think you can create something different, unique. Coming to investor and say, look, when should I do my next fundraising? I have no answer. I said, what does the business want? If the business needs another round of fundraise to be done, let's discuss. If it's not required, it's a wasteful discussion to my mind. So it's everything is organization driven. It's everything is driven by the thesis of what the company is going to be built on. So there is a slightly over reliance by startup founders on investors, and they're trying to build for investors, which I'm against, because businesses have to be built on fundamentals. Any business which is fundamentally strong will get investment, will get attracted by anyone in the ecosystem. And if it's fundamentally weak, I think it's very difficult for you to attract, whether it's bank funding, whether it's VC funding, or any kind of funding. That becomes very, very critical. How do you own up the entire thing and be there for the long haul? I think it's super critical to my mind. The other data point we were looking at very recently is that in the digital space, the market is growing, at a rapid pace. Today, we are talking about more like $40-50 billion business being done on commerce, which is e-commerce and Q-commerce put together, which is very high and growing at 25% annually. I think that is an area where a lot of new brands are coming and are able to make themselves attractive as a brand and established as a brand in, let's say, 2 to 3 years. And actually, I'm super surprised. I can't take names. In the last 2-3 months, I've met few companies. They're like 100 crores revenue in 3 years, 2 years. So it's like, we are not able to do this. So how is that these guys are able to do? And the formula is, there is no rocket science in that formula. It's actually fairly basic. And that is what I'm trying to explain to my team internally. They're not able to understand, simply because they are just looking at, I will look at a certain set of consumers, let's say in Kerala, in Karnataka, in Tamil Nadu. I will look at what, certain channels of, let's say, Flipkart. I will go to tier 2, tier 3. All my communication ads will be driven accordingly. And, my reach is not going to be across. It has to be very, very targeted. And, it's just wonderful to see that people are looking at businesses in a very simplistic manner and able to establish themselves. So there is a method to it. I think that is what is important, not to get too worried about too many jargons and too many metrics, not to get worried about too many investor inputs and stuff like that. I think it's about how you want to build your business. Fundamentally is very important. By 2030, as per one of the reports, Gen Z and millennials will be 50% of the population of India. Are we addressing them? There is a set of consumer in India who have never shopped offline. And we keep discussing, offline versus online, digital versus, mom and pop stores. There are those set of people who are exposed only to online purchases. And there are many brands which are not present as significantly in the digital space. So what's going to happen to them 10 years from now? So a lot of things, transformational things are happening in the economy, which one has to understand and work towards. I think the last decade has been transformative in my view in multiple ways. Some stats I shared with you. Next decade, I would say everything will be 2 to 3x of what has happened in the last 10 years. So I think I'm extremely excited and bullish. And I think in Kerala itself, there is so much of opportunity. Just in, for example, if you look at food and beverages, I mean, there is a huge scope to build, let's say, a snack brand just within Kerala, in Tamil Nadu, in Andhra, Telangana. So I think people are still looking at it in a very smaller way. They have not been able to, let's say, build something with a certain thought process, with a certain consumer in mind. So I will leave you with these thoughts, just, repeating my last comment that I think next 10 years, we're going to see 2 to 3x of what we are seeing in the last 10 years. So that's all from me today. I think I have been given 30 minutes. So any comments, or I know it's a one-way monologue. A good thing is it's the first session, so it's always easier, not a post-lunch session. Yeah, please.
Hi, sir. Myself, Santosh. So I have a specific question. I'm building something in the consumer space. Okay, so what my reality with my founding journey has been that PMF is a big space, right? When large ticket organizations like yours come to have conversation, PMF is something that you guys also look into. But the reality of life is that it is also very difficult to reach the consumer group that you are looking at. Specifically, if you're trying to build a niche and build around that niche and then try to scale it up. See, the easiest way to build awareness is when you have big guys coming in. Let's say you have celebrity endorsements and stuff coming in at a very early stage, and you can shoot it up. But how do, as startup founders, specifically building in niches, what as per you should be the method of madness in building that niche around and getting to the right consumer? Because getting to the right consumer itself is an expensive affair.
No, very interesting point actually, and I think what's happening is today, given the technology offerings available, given the just the fact that in the last, I would say, 7-8 years, the last 4-5 years, again, the tools available to reach consumers are available. So you'll be surprised that there are companies where I find that the products, and you're talking about, you said personal care. Yeah, great. So there's absolutely white space, to my mind. There are hardly any good companies around functional beverages. It's important that taste pattern is correct. But important, as I said, there are a few aspects to it. I think today, if you're going digital, I think the tools will actually help you to target your kind of consumers at a very low cost. And I think you should be able to make your mark, assuming the products are like really good. So I would say you look for the right kind of, you can talk to some of the marketing guys in the digital space. They'll give you some ideas of how to kind of navigate this. And the competition is not from the large companies, let me tell you. Large companies are slow. They are not as active in the digital space. And in fact, that's an advantage to you. Because then whom are you competing with? You're actually competing with a very handful of companies. And just get your, especially if you're talking about beverages, get your product, the taste pattern, higher than anyone, and you're one of the best. I think it will work, because I'm seeing lots of companies, but none of them are really meeting my mark. So I think great space to be in. Okay, thanks then. Yeah, Muli. Yeah. So some points on unit economics, right? See, fundamentally, these are jargons we use, but what I mean is profitability. Okay, and we break them into various, stages. So, in a very loose manner, we talk about gross margins, and then we talk about CM1, CM2. I'll explain, because these are terms that we like to use. But fundamentally, what we mean is that if, let's say, which product will you be in, or you, dairy. Lovely. So you have a certain gross margin profile, right? And then there is a certain marketing cost and overhead cost. So this will vary across 5-6 companies. You take Akshakalpa, you take Sid, you take all those 5 milk mantras of the world. Not really, but their cost structures are different because of various reasons. So here unit economics means that at a certain margin level, at a gross margin level, are you making money or not, right? And at a certain volume, current volume, are making loss. Let's say PBT loss, but as this grows, it should become profitable. I think that is what one wants to say, that economically it should make sense as the company scales. It may be in a loss now, but not later. So there are examples where the gross margins are itself in a loss. So whatever scaling up you do, you make it 2-3 times bigger, it will still be in loss. So those are something very critical to look at, especially in your business, because the margins are thin in dairy in any case. One is that very simplistically and nicely you have put, but then what happens is a lot of companies are putting a lot of marketing costs which are like disproportionately high, with the hope that I'll double it in 1 year, 2 years, and 3 years, which I don't mind. But my only worry is that what happens if you hit a wall. So one has to be a little careful, is all I'm trying to say, because you have to survive. Your business has to be sustainable. Yeah.
Service-based sectors, like how to scale it in like a bit more higher manner. Like when we do in the service, we have to put some clinics, all this particular space. So the scalable part is getting very difficult in that scenario.
So I would say that clinic model is a little high capex. So initially you have to put that money in. So have few clinics, 1 or 2 clinics to start with, and make them work, make them profitable, and make the brand known, and some pull should come, and then you go for more clinics. So for example, I invested in this in a Rainbow Hospital. They started with really one center in Hyderabad. They become very popular, and then Hyderabad they went for few more hospital clinics and chains and stuff, and then we went to other cities. By the time they had expertise in how to run such hospitals, they had good doctors, and the name also kind of helped them get more patients. So I think don't hurry by just starting off multiple clinics across, let's say, wherever, Kochi or Trivandrum. Bangalore. Senior citizen? No. So I think the best is to create a brand for yourself, some name, 1 center, 2 centers, and then you try to build on it. It'll take some time, but I think there is absolutely a massive opportunity in healthcare. Any part of healthcare, look at the massive opportunity, and keep your service levels 5-star, 7-star. You will certainly get repeat patients. Well, there's no dearth of patients in this country, right? It's just that the service has to be such that they'll come back to you. A word of mouth becomes stronger.